una idea, Adam, quien ustedes están viendo ahí en pantalla, es el fundador y el CEO de una compañía que se llama Trivariate Research. Tiene obviamente una cantidad de años de experiencia, ha trabajado muchísimos años en lo que se llama el buy side y muchos más en el sell side. Y no solamente eso, sino que indudablemente es una de las caras más importantes de la cadena importante de finanzas también, como lo es en inglés el CNBC. Indudablemente tiene mucho que contarnos el día de hoy. Vamos a estar conversando con él muchos de los aspectos importantes del mercado. Hoy viernes 28 de marzo. Y yo creo que lo más interesante es que sepan que Adam tiene un PhD. O sea que obviamente ha estudiado muchos de los aspectos importantes de macroeconomía, además de que nació en una de mis ciudades preferidas como lo es Boston. Así que thank you, Aaron. Very glad to have you here in our Tribune. How are you doing today? And probably the first question is, what do you think about the meltdown we are facing today in the morning?
Victor, buen día, buen negocios. Thank you for having me. The market is volatile because there's uncertainty about growth. And I think the growth has slowed this year. Some of it is from tariffs and policy, and some of it is more of a consumer slowdown. And I think we saw a lot of data points in March that lead us to believe the market and the economy are going to slow some through April earnings season.
I see. And listen, in the real question that people have, how do you think we should navigate the Magnificent Seven now that we're heading again into the earnings season in the next few weeks? Obviously, we have a pullback, but I think people are now paying more attention to the fundamental. So what do you think it will be an opportunity that we need to start seeing on that earnings season when the time comes in the next few weeks, Adam?
Yeah, in early February, we decided to downgrade the Mag 7 and tell people that they should own less than the market weight. Our view was that the capital spending numbers that they guided to in January were huge. And so now these businesses were 8-9% CapEx to sales. Now maybe they're 15% CapEx to sales. And so that, in my mind, is a different capital intensity. It's a different business model. And so that combined with that day we saw in January, that Deep Seek Monday, made me think that there's some risk to their business models that wasn't in the price. That call's worked a lot the last 7-8 weeks, but I'm not sure we're going to hear anything in the April earnings season that gives us confidence. I think for the first time in a couple of years, we could see some bad guidance and maybe even some negative pre-releases in the first 10 days of April. So I'm a little bit more near-term cautious on the news flow that's going to come in earnings.
Listen, and if you see the markets today and within the last definitely first quarter, one of the things you have to pay attention is that we are very close to the end of the quarter, and sometimes you have some sort of markups, but you see now that technology and consumer discretionary, we have a huge swings intraday. For example, I think at the beginning of the week they were going up 3.5% in one day. Now you see them coming down year to day dramatically. How do you think that's going to play, taking into consideration that energy and utilities are leading year to day, and obviously we have in these uncertain times where we don't know how that sector rotation is working and how it's going to play for the second half of the year?
So we came into this year, our top sector pick, our biggest recommendation was healthcare, and then our bottom or our least favorite was consumer discretionary. Our view was more about where the estimates were more relatively achievable. It felt to me like the consumer estimates were way too high. The economy has slowed, but the consumer numbers didn't really come down. And a lot of those businesses, I think, will have poor guidance in the second quarter. On the other hand, healthcare, we came to the year thinking that policy would wreck the earnings of a lot of those businesses. But demand for healthcare services and hospitals and distributors and managed care is pretty steady. And so I think if you're playing the game of which parts of the market have more achievable estimates, I still like that as my top pair trade, long healthcare, short discretionary. I think, what's going to work when we get recovery is a different question, Victor. And I think that probably is tech. So if you're bullish on the market, you probably have to own tech. We went back and looked at the last 20 times the market went down 10% or more, and then what recovered in the 3 months after, and 19 of the 20 times tech worked. So at the end of the day, I think if we do get a rebound later this year, it will be from the tech sector.
Do you have the same perception that we've been seeing in the market lately, that people have the perception again that Donald Trump or the administration will do a lot on tax reform and deregulation in the second part of the year? So that's why I think the machines and the quantitative model are not even going lower these days with this amount of bad news. And you're mentioning now that we should basically try to accumulate tech. To be more specific, I think the biggest drawdown is on Tesla. And we're seeing a lot of things with the tariff on Wednesday. What do you think it will be the best in those magnificent 7 that you should play if you think that the amount of reforms and deregulation play an effect in the second part of 2025?
Yeah, the way the administration has worked is we focused on tariffs first, which Trump was very clear about during his election run-up and into the election. So it shouldn't be surprising that tariffs are a focus. I think what's more a debate, Victor, is how much they'll be and when they'll hit. One thing I learned during the election was the Poly Market, the gambling site, was accurate everywhere. The polls weren't, right? The polls, people thought Harris was going to win. The Poly Market was accurate. There's actually a Poly Market right now for, will Trump put a tariff of 5% or more in over the first half of the year? And it's only at 56 cents, meaning 56%. So I don't think it's a slam dunk there'll be big sustained tariffs. I don't think Mexico and Canada, Mexico's been very quiet about it, I think. I don't think they want to get in a big tariff war. The U.S. GDP is probably 10 times as big as Mexico or Canada. So if you do things pro rata, it probably hurts those countries 10 times as much. So I think we'll get on the other side of the tariff stuff. And at some point, we'll be talking about taxes. We'll be talking about regulation and some of the pro-growth stuff that got people excited around the election. So that would be the bull case if it forms later in the year. I just don't think, most people think there'll be a huge trade war. I think the China part is probably the trickiest, maybe more so than Mexico and Canada. In terms of the tech stuff, look, business slowed some in March, and I think management teams were sitting on their hands a little bit. Auto, industrial end markets slowed. So, I think it'll take some time before we see better guidance, probably later, Q3, Q4. In terms of which of the Mag 7, your exact question, look, I think computation is going to grow way above GDP. If it was GDP plus maybe 2% for the previous 20 years, and now it's GDP plus 6 or 7 because of AI, you're probably going to want to own semiconductors at some point for that trade. And obviously the best looking person in the room is NVIDIA. So it'll probably be, semis at some point that lead us out.
Excellent. And listen, finally, I want your opinion, and you're an expert on that, obviously, and how the Fed is playing this kind of stagflation scenario that we have. You have the, before I was interviewing you this morning, we were seeing the 10 years, it basically is telling us that they don't know where to go. It was 480 a few weeks ago, then was sitting at 420, then yesterday went 436. Is moving, and obviously we have the PCI data, and it was not that good, but I don't think it was an event. I think everybody is basically seeing April 2nd. So what do you think the Fed will do to try to kind of improve their monetary policy with this scenario where they don't control? Is Trump the one controlling the whole thing for the markets and for the economy?
Yeah, it's a good question. We actually have a business, an offshoot called Trivariate Research. And at Trivariate, we sell to individuals and financial advisors and individual investors for $100 a month research. And people can go to trivariate.com and check it out. And trivariateresearch.com and check it out. And we wrote about this exact issue. I think Powell and Trump don't get along very well. And I don't think Powell really wants to help Trump so much. I think Besant is concerned about housing and doesn't want the 10-year to go up too much, because I think we've had poor housing news. So there's a little bit of tension between the long end and the front end of the curve. My own personal opinion is that the 10-year probably will trend a little bit lower, and ultimately that should stimulate housing. We wrote about that in Trivariate Research, that maybe it's close to the bottom on home builders or building products or some of those kind of names to take advantage of this. I just think the one thing that I'm not maybe in agreement with consensus on here is that there's some Fed put, and that if the market acts bad, the Fed will cut and the market will rally. I think at this point in the cycle, if the Fed really starts getting dovish, it's probably because the economy is deteriorating, and you'll be more worried about the growth falling off than you will think, oh, great, the Fed's there. So I don't know how much Trump's going to get helped by Powell on the front end. I'm not that convinced on that.
Alan, we're very happy to have you in El Cierre de Wall Street, which is the extension of, let's say, after the bell in English. And
okay.
Before we leave, I want you to tell us your tres best ideas that you are seeing today at the end of March, when everything is moving, volatility is changing, all the models. What do you think, if somebody's listening to you, they should play the 2025 short term with your tres best ideas?
Yeah, one is definitely healthcare. I love healthcare services. I think these companies have pricing power. I run a small business. We use United Health. They're going to raise pricing on me next year. Okay, I have no choice. So I think those businesses, their costs come under control. They have pricing, and I like healthcare services, whether it's McKesson, Cardinal, Cencora, United, Elevance, CVS, those kind of businesses. So that's one idea. Two, it looks to me like the U.S., at least in this regime, is focused on better alignment of what they consume with what they produce. So meaning we produce, I think, less than 1% of the world's aluminum, but we consume 17 to 20% of finished product. So I like playing the tariff game by owning Century Aluminum, CENX is the ticker, or maybe U.S. Steel X, like something where we're going to take advantage of the resources here. Trump seems to talk about Greenland or Alaska, or this sort of notion that we need resources here. You even saw it as part of the Ukraine negotiation. So I think you could buy aluminum or steel or something where we're probably going to increase our production closer to our consumption. I think the third area would be industrials. Industrials were in a recession last year. Earnings were down year over year. So the math of it is that we're going to have accelerating earnings in Q3 and Q4 unless the economy really falls off a cliff. And so equity investors typically anticipate earnings acceleration by 3 to 6 months. And so maybe I can take a shot at some of the machinery stuff that's agricultural or electrical equipment and the like. So I kind of like that healthcare, metals, cyclical industrials as my best long ideas. And I would avoid the traditional retailers, the consumer discretionary part that I think will continue to be poor through this year.
Alan, it was a pleasure that you spent some time with us here in Negocios TV. We will invite you back, and thank you very much for everything.
Fantastic. I appreciate getting to see you and hope to do it again.